Jim Romer, the Weather Wealth newsletter, only all-weather newsletter in the world, helping farmers, traders, ETF investors in 10 different countries, from natural gas to grains, soft commodities, you name it. We hope you take a 2-week free trial period. The stock market is not going up forever, folks, but there are many opportunities to trade commodities on the weather. Look at the extremes we've had over the years all over the world, from climate change to droughts, fires, floods, you name it. It's affecting, unfortunately, millions of people around the world and also many markets. We'll discuss today in this webinar here in mid-May 2023 some of the extreme weather events so far this year, how I predicted the bull market in sugar earlier this spring and the recent big sell-off in corn and soybeans. El Nino, how the trade wind southern oscillation influenced the formation of El Nino, the negative PDO warm Nino 1-2 relationship. What is that? Cattle prices and plains droughts, and also our longer-term bearish outlook for corn and beans, in which at this point we've seen about a 10 to 15% break as of mid-May in corn and beans. We advise various short positions, at least for now, for many of our Weather Wealth clients in these markets. So, record snows in California. Look at my poor friend here trying to get back in his house. We don't just look at El Nino, La Nina. We look at what I call weather weirdos, the droughts and recent fires in California, flipping to record snows and flooding, the historical heat waves in Europe. Never before during the last few La Ninas have we seen such hot weather. Typically, it's cool in Europe during the La Nina event. So there is definitely some validity, in my opinion, and most scientists around the world, that climate change is a factor in all this extreme weather. The plains drought. Look at this. A multi-level drought helped wheat prices as of early May soar about $1, $1.50. Also Russian tensions and a lack of exports. But as we go deeper into May and June and we see improved rainfall for the plains and also harvest pressure, we expect wheat prices to go down. We've had our Weather Wealth clients short call options in wheat on these recent rallies. Wheat crop one of the lowest in recent memories, but most of these years you see here with 15 to 10% below trendline yields, 2002, 2014, 1996, all had bear markets. Once the market absorbed the droughts and the higher prices came, we began to see lower prices into harvest. This is what the Kansas City-Chicago wheat spread has done. Unbelievable over the course of the spring, partly because Russia exports hard red, high-quality wheat that's actually traded in Kansas City. That's bread. Chicago wheat is more for livestock grown in Europe and in the Ohio Valley from Illinois and Indiana. That's lower quality wheat. That spread has soared because of the drought in the plains and the Russian export restrictions. Look at this as of about May 16th or 17th. But longer term, that spread may begin to go back down. Now, during droughts, look at this. Since 2004, 3 of the biggest droughts in the plains, this one certainly the worst in probably 50 years, we've seen higher cattle prices. Why is that? Well, when you have droughts, like I showed you here in Kansas, Oklahoma, and Texas, which produces a large majority of the cattle in the United States, farmers liquidate their herds. They push cattle to market, and that means they have less calves grazing, on pasture. And then 12 to 18 months down the road, that means less cattle are produced for farmers, and that creates a bull market, a short supply in cattle 12 to 18 months after droughts form. Indeed, as of April 2023, drought in the plains, drought in Argentina from La Nina, a lot of that's been old news now, built into the market in grains. That's why we've been bearish over the last few weeks. Sugar prices soared this spring because of incredible wet weather and problems with the Indian crop. They're not exporting as much sugar. And now there's a drought in Thailand. That's a staple, a signal that El Nino is actually forming. So what about wheat prices I mentioned? Look at this. These are the last 4 bull markets. And then you saw how prices in 3 of the last 4 ones actually went down during late May, June, and July, as the market already anticipated all the drought news, and then harvest pressure tends to hit the wheat market. So what's going to affect global weather and commodities here over the next few months? The negative PDO, that cool tongue you see off the coast of California near Baja, was the result of 30, that's right, 30 atmospheric rivers, incredible snows and floods in California. As I showed you early on, my friend there near Mammoth Mountain with about 700 inches of snow, 15 or 20 feet, plus easily 40 feet actually. That snow and that cold, all those storms created a cool tongue off the coast of California, and typically that prevents El Nino from expanding west when you have that negative PDO, okay? But we are seeing that PDO weaken somewhat. In other words, it's warming now off the coast of California a little bit, and that warm tongue near Peru is expanding further west, so El Nino should be forming. During the La Nina, you see the trade winds blowing from east to west. That brings up cool waters to the surface, creates droughts in Argentina, droughts in the plains wheat areas. That's what we've seen over the last year or two. But as those trade winds reverse and go the other way, what happens is you have something called the Southern Oscillation Index going negative. That means high pressure and droughts over Australia, winds blowing the opposite of this from west to east now, and that tends to bring warmer waters further east into the Central Pacific and also in Peru. As you see, I mentioned a minute ago, the record heat and drought developing in Thailand. That can affect sugar prices later on. Going back to what I just said, those winds are blowing now, again, from west to east, and that's a significant feature because it's not just the ocean temperatures warming up that produce El Nino. Those winds blow from west to east. You have the Southern Oscillation Index go negative, and that is a full-forced El Nino. When it actually happens will dictate grain belt and soft commodity weather. Will it wait till the fall and become a moderate to strong El Nino, or only a weak El Nino in the next few months? We'll discuss that here in a second. We were bullish sugar early on the problems with flooding from La Nina in India, all sorts of other weather problems. If El Nino does develop in the full force this summer, we have the continuation of problems in Thailand, which is the third biggest producer of sugar in the world. And folks, they produce tons of computer chips and electronics. That could affect those industries during the summer and fall. And again, could create a bull market later in sugar, as again, they're the third biggest exporter in the world. So we mentioned that negative PDO a couple minutes ago, if you remember, right? That cool ocean current off the coast there of California. That's going to be very, very important because if that continues, it doesn't weaken, it stays cool, and El Nino is only neutral to weak, we could have in red a dry June, July, and August in the western Corn Belt and Plains again, and that could put the brakes on this collapsing corn and soybean prices I called for my Weather Wealth clients over the last month or two in my newsletter. Will that happen? You'll have to subscribe and find out. One trade in corn and soybeans like we had over the last month or so will pay for my service for 3 or 4 years. It's worth it, folks. I've been doing this for 38 years, and I really understand the psychology of many of these markets. Now, if El Nino develops strongly before July, a strong El Nino, these are the analog years you see there, 53, 58, all the way up to 2019. Those are all strong El Ninos, and not all of them, but the majority of them combined had wet weather in blue. That's quite different than that dry trend with a weak El Nino or an El Nino neutral and a negative PDO. The PDO warms up off the coast of California, and we have this El Nino develop very strongly, more quickly. We'll have $4 corn and $10 soybeans by the end of the summer. So going back to that PDO, when you have that cool negative PDO there, look at the dry trend you have during July. That's what we're going to be watching for Weather Wealth clients with frequent updates here over the course of the summer. Again, if that PDO switches from cool, right, off the coast of California to warm, we have more of a neutral to positive PDO, and El Nino develops in the full force here, we will have in blue a cool summer. So that would be bearish natural gas later on again, and that would also be bearish the grain market. That's what we're expecting right now is a normal to cool summer in the Midwest, but because of the warming oceans, again, we're looking at some analog years, 2009, 2014, etc. Because of the warming oceans, it may not be as cool as this, as we do believe somewhat certainly in climate change. Most El Ninos that became moderate or so by the summer had lower corn prices. Another favorite analog year of ours was 2014. Look at this wet weather in August. August, of course, the most important time of the year for the soybean crop. And what we do is we try to piece all this together. Look at 2014, the last full-fledged drought prior to this spring for plains wheat. Cattle prices soared. Look at that drought. That was a La Nina that switched to an El Nino event, okay? Went to an El Nino event by the summer, and you can see that wet weather, as I mentioned, in the northern and western corn belt, and actually a cool July. That's bearish grains, folks, if that happens. As you see there, corn prices went lower once again. So I did all the math on El Nino. What are some of my conclusions right now? Odds favor some mix of 2009 and 2014, an El Nino phenomenon. Would suggest above normal yields for corn and soybeans and lower prices. Potential weak Indian and Thailand monsoon could produce higher sugar prices, maybe possibly a bullish cocoa market. Already begin to see that now with tight supplies and fertilization problems for farmers holding back their cocoa. If we have a full-fledged El Nino this year, we could go up another 10-15% in cocoa. And the drought possibly easing in Texas over the next few months could be a bearish factor 6 or 12, 15 months down the road in cattle longer term. Sorry for that last slide. You get the idea. Join my YouTube channel. Go to my website, bestweatherinc.com, and please download a free issue of my newsletter and also a 2-week free trial period. Thank you.